Good evening, good afternoon, good night, depending on where you are trading in the world. Welcome to CryptoBanter.com, the world's first live streaming 24/7 crypto trading channel. Yes, guys, this is a channel that brings live trading information to crypto enthusiasts like you and me, because we know that you need live information to make money in the tough crypto markets. Tonight, we've got a massive show for you guys, but we're going to start off with the headlines. And the big headline, of course, is Bitcoin taking center stage at the G7 call. We're going to look at a full account of the call and what the potential implications are. Now, regardless what happened on the call, MicroStrategy intends to keep buying Bitcoin. They announced that they're going to raise over $400 million in a convertible note to buy none other than Bitcoin. Is Michael Saylor going too far? I mean, he could land up being a legend. If this fails, he could have destroyed his entire career. It's a huge, huge bet. And today we're going to talk about the implications of the bet that Michael Saylor is taking. And as everyone's watching Bitcoin, Grayscale says that institutions are now buying Ethereum. So we're going to look at the charts, the numbers, and find out what is a bigger, better play. And as XRP holders await the long-awaited Flare Airdrop, one XRP whale is selling his bags. We'll find out who this whale is, how much selling he's still got to do, and when the selling will stop. And tonight we put our money where our mouth is. We've created a fund that is going to be made up of the calls on this show. Yes, guys, you heard right. A fund whose sole objective is to trade on the calls of the show. And we're going to be distributing the profits of the fund to the Crypto Banter community. We have a big show for you tonight. Lots of big names, including Scott Melker, the Wolf of Wall Street, as he calls himself, or the Wolf of all streets, as he calls himself. We got a huge show for you tonight, so stay tuned to Crypto Banter. We'll be back after the break.
Crypto Banter is the world's first interactive social cast for the crypto community. Get the latest news, views, interviews, and live conversations with crypto enthusiasts from around the world. This is where you call in, you make the show, and you bring the banter. That's CryptoBanter.com, where you talk crypto.
Yep, that's indeed CryptoBanter.com, where you talk crypto. We do have the best community in the world. And if you are watching us on YouTube, now is the time to hit the like button and hit the subscribe button. That will get the YouTube algorithm to communicate to all the crypto enthusiasts around the world that we are live, and there is a live show bringing live trading information right to your fingertips. Because we know that only live information can make you money when you're trading crypto. And a reminder that this is a call-in show. Yes, guys, this is your show. This is where you call in, you make the news, and you bring the banter. So call in during the course of the show. Tell us what you're trading. Bring the banter. Let's talk trading. Let's talk crypto. We do that all the time on Twitter and Telegram. And the idea is to bring the banter from Twitter and Telegram right here to CryptoBanter.com. And again, just a reminder, keep hitting that like button, keep hitting the subscribe button. You guys are our community. You guys are what makes the show. We've been doubling our views every single day. It just shows that what we're doing here is amazing. We are going to grow. It's going to be amazing, but we need you guys. So without further ado, we're going to start the show. And of course, like every show, we're going to start off looking at the Bitcoin price, which seems like it's been sitting on a ledge. We saw it at around 19,200 and it pulled back to around 18,750. And it was probably because of the news around the G7 and the fact that crypto made headlines. I mean, what kind of time are we living in where Steve Mnuchin tweets and says, productive G7 call this morning. We discussed the effective actions in response to COVID-19 strategies to achieve a robust recovery and cryptocurrencies. Never did I thought we'd see a time where Steve Mnuchin brings up cryptocurrencies in the same tweet as the coronavirus relief plan and how to stimulate the economy. Scott, what do you think? Are you surprised by this tweet?
I mean, I would have been surprised by those tweets a year ago. I can't lie, and I think that it's a testament to how far we've come. All of us have been here for years, and it used to be the talk of the town anytime we heard a simple mention of Bitcoin anywhere in the media. Right? You were the only one who was actually on like mainstream media talking about this at all. And a Forbes article, a mention like that would move price 10%, and now it's just another day, back at the track. I think it's surprising, but I think there's a lot of demand for them to give the community answers. And now that the mainstream is paying attention, they want to know that this is a safe investment and a space that they can put their money. So, yeah, I mean, obviously your take was that it's sort of bearish that he said it, or that we're seeing a drop. I mean, I just see this as absolute sideways chop price action, nothing to read into it, and just very hard to discern what the next coming move will be. So, but I'm also looking forward to not hearing Steve Mnuchin's voice at all. Hopefully, in the coming months.
We can't wait. We can't wait for that day. So, I was going to ask you: is it bullish or bearish that they're talking about crypto? Now, it can't be neutral. It has to be either bullish or bearish. It's either in anticipation of some kind of impending legislation, which of course will restrict cryptocurrency and cryptocurrency trading, or it's a legislation that will give us clarity and actually promote trading, maybe even get us one step closer to an ETF. So, I mean, how are you seeing this? Are you seeing this as a bullish thing, or are you seeing this as a bearish thing?
I see it as bullish, definitively bullish. And, for me, it's like any press is good press, right? The Howard Stern model. If they're talking about you, you're doing something right. So in my opinion, it was a necessary conclusion to all of the talk. As I said, they have to do something about this. They know that it's going to eventually be regulated. But at the end of the day, my belief is that they just want their tax money. Right. At the end of the day, they're not trying to protect people. That's such a farce. At the end of the day, they want to make sure that they're getting their cut of the action. And that's inevitably what the regulation will probably focus on.
So I don't know if this is only about tax. Yeah, of course, it's a lot about tax. But if you look what the German finance minister, and I think he was referring to Facebook. Yeah, and he said, a wolf in sheep's clothing is still a wolf. It's clear to me that Germany and Europe cannot and will not accept entry into its market while the regulatory risks are not adequately addressed. Now, this is the part that kind of doesn't scare me, but kind of shows me how governments are trying their hardest to prevent Bitcoin taking over the world. He says, we must do everything possible to make sure the currency monopoly remains in the hands of the states. Now, I can imagine what happened in that call, and I can't imagine that all the other governments, finance ministers, treasury secretaries, I can't imagine they turned around and said, oh, no, we must just let Bitcoin run. What are you talking about?
Right. I think it's important. Yeah, I do think it's important to clarify that he was talking about Facebook and Libra, which is now, of course, DM, because they want to separate themselves from both Facebook and Libra, non-ironically. Comparing a wolf to Facebook is an insult to wolves worldwide, right? Myself included. I just think that the reality is that, in this case, it seems like he's talking more specifically about a corporation creating a currency and interfering directly with global currencies. But as you said, I mean, the conclusion of that was that it needs to remain firmly in the state, in the hands of the state. And to that, I say, sorry, it's coming.
Okay, so you're not expecting any shotgun legislation before the end of the Trump term or before the Biden inauguration. You're not expecting this bullet legislation which starts hampering cryptocurrency, because that was being spoken about last week, I'll remind you.
That was being spoken about by Brian Armstrong, who probably has lobbyists in Washington at this very moment discussing it. And nothing against Coinbase or Brian Armstrong, but the CEO of a company's job is to talk their book and act in the interests of their company. I don't fault him for that, but to me, that's not the most direct and reliable source of what's likely to come. Further, my feeling is that the Trump administration has a lot bigger things on their mind than worrying about Bitcoin in the next 4 weeks, 5 weeks. And third, any legislation that's definitively passed in the next few weeks could be immediately reversed a few weeks later by an incoming administration. So to me, it's clickbait. I'm not in Washington. I have no idea. Maybe it's completely true and there's going to be something tremendous, but classic buy the rumor, sell the news type of situation in my mind is that I don't really pay much attention to rumors. Just let me know when the legislation is done and we can react to it then, because otherwise we're just spinning our wheels trying to react to something that may not ever happen.
Yeah, that's an amazing attitude. Scott, your followers and community is going crazy. They're going into the chat. It looks like they want to call in. Guys, I want to remind you, if you do want to call in, this is a call-in show. Yep, it's your show. This is where you call in and you bring the banter. Go to the YouTube. In the comments of the YouTube or in the description of the YouTube, there's a StreamYard link. Click that StreamYard link, and that will bring you directly to the studio. You can remain anonymous. You don't have to be on video. You can be on audio. You can change your name, and you can even put up an avatar. So come on, join the show. Let's talk to Scott. I see all the guys in the waiting room. We are going to bring you in. Scott, where do you think this Bitcoin price is going now? We've got it like hovering around 18,800, 19,200. And no matter how much good news comes out, and a lot of good news has been coming out every single day, it seems that the price just doesn't move. We can't break this like wall at the all-time high. How are you seeing it?
I mean, rationally, I think it's a sign of a mature market that price does not react to every little piece of news. So I would say that to me, that's a net positive for Bitcoin and for the space. In March, price was $3,800, and now we're at 20,000. An expectation that we would blow through 20,000 seemed dubious at best in my mind. From a technical perspective, consolidation under resistance usually leads to expansion above resistance, right? So every time it's dropped even slightly, I think we're seeing it bought up. There's clearly demand. Hell, Michael Saylor is about to buy $400 million worth, right? Not today, obviously, but there's no question to me that there's demand for Bitcoin. And it's very important to me to differentiate. We can talk about this as a trader, which is a very different thing. And I think that even most traders are investors first. And, as an investor in Bitcoin, I'm salivating for the opportunity to buy this once again a little bit cheaper if that happens, or above 20,000 to continue to buy it. But I don't see anything macro bearish. I don't even think a drop of $5,000, $6,000, $7,000 is bearish in my mind, right? It's an opportunity.
All righty, you've touched on a whole lot of things that I want to talk about, but the most important one of those things I want to talk about is, where would you be buying Bitcoin again? So you're saying that if the price came down a certain amount, you turn around and you'd look for the opportunity to buy in again. Does that mean you're not buying in at 19,200? And if you're not, what is your level? What are you looking for to keep buying Bitcoin?
Once again, I get to, I guess, put on two hats. As an investor, I effectively buy Bitcoin every day, right? I dollar cost average. I'm price agnostic. It's the way I've treated investments my entire life, as a real adult, as I like to ironically call myself, because not true. So I think that that's what most people should be doing, right? And I think it's important to remember that most people who've gotten wealthy in markets over time have never looked at a chart or chosen a level. They've just bought stuff and waited for it to go up. And so that's my main strategy. If it comes down to between 12.5 and 14.5, I'll be selling firstborn, cars, houses, anything I can to get my hands on more. For now, I'm investing, but I have no interest in trading it.
Yeah, I'd be selling my mother-in-law if it came down to,
well, everyone. People sell their mother-in-law for no incentive. So
yeah, let's talk about the other bit of big news, and of course, the other bit of big news is this Michael Saylor news. In 2013, he tweeted that Bitcoin will go away or be outlawed, just like the gaming and gambling office. I don't exactly remember the tweet. But now, after buying $500 million worth of Bitcoin, he's now announced that he's trying to raise a convertible note of $400 million. And he said that what he wants to do with the money from that note is buy more Bitcoin. Has this guy lost his mind?
The man has balls the size of New York City. And I think that he's at a point in his life where he's ready to make a statement. I actually spoke with him recently on my podcast. We talked for about 90 minutes. I probably said about 17 words. Nobody makes a better case for Bitcoin than Michael Saylor. But I asked him about this specifically, and he basically said that he sees it as a time now where you have to make a choice. You have to choose a side. There's a war coming, and he wants to be on the side of the Bitcoiners and the technologists and the thinkers and the people who value facts and science. And this is his big bet to do that. I don't think he's nuts at all. But
he makes an incredible case. I mean, if you listen to him talk, and I think his narrative is the same in all podcasts. Now, the thing that baffles me is here's a guy that 1 year ago was pretty much against Bitcoin, and now he is not only a proponent, but has created a case which is stronger than most the OGs that have been in this space for a long time. I mean, when you listen to him talk, and he says, we couldn't put our treasury into property. We weren't going to put our treasury into gold. We couldn't be in currencies. We were then faced with a choice. And then I went all in and I put all our treasury into Bitcoin.
It's not the full treasury as I understand it, but it's enough. And we've seen what the stock price has done as a reaction to that. I mean, MicroStrategy is up as many multiples, but if price had dumped, that's not what we would be looking at, right? So it's always easy to look at things in hindsight and say, what a genius he was. But to address the part about his 2013 tweets and his attitude even a year to 2 years ago, I mean, I've talked to him personally about that, both on and offline as well. He said, I changed my mind. And, God forbid somebody on social media say something that contradicts a tweet from 7 years ago when maybe you didn't think the same way. But we're all beholden to everything we've ever said in the history of mankind, right? Which is absurd. But the man said, listen, and you know why he's a billionaire? Because he has the ability to pivot, think for himself, and, come up with a new narrative when appropriate. He said it's a result of what we've seen in 2020. Bitcoin was one thing in 2019. It was a narrative, and now it's seeing that narrative come to fruition. So serious money and serious people are taking notice and need exposure.
Okay, humor me for 1 second. We all know what happens if this goes right. Like if this goes right, MicroStrategy's price goes through the roof. He's remembered by the stock market and by the Bitcoin community and by the crypto community as this big legend who was the first institutional guy to jump in. We know what happens if it goes right. What if this whole thing goes wrong? What if Bitcoin collapses and goes to $1,000 per coin and MicroStrategy wipe $500 million off their balance sheet? What happens to Michael Saylor then, given that he has shareholders? It is a publicly listed company. How does this thing end?
He loses his job. I'm assuming that they have a floor at which they would be willing to admit that they were wrong and sell Bitcoin. But I think it's also important to note that people like Michael Saylor and Paul Tudor Jones and Stanley Druckenmiller and Bill Miller, they don't really buy things when there's a major concern that there's some destructive legislation coming. Let's not pretend that these guys are like getting the same information flow as the rest of us, right? I mean, these guys have lobbyists. They're talking to Washington. They know legislators. They have, I'm not saying to him specifically or anyone, but they have relationships of strong support with senators and Congress people based on donations. So this isn't like, I don't think this is as wild of a bet as it looks to your average layperson. I don't think that these guys would be taking these risks if they really believe that it was about to be legislated away by Mr. Mnuchin up there, who will soon be gone.
Do you think this is going to be a trend? I mean, we have seen one or two other big companies put their treasuries or some of their treasury into it. If I remember correctly, after his announcement, after Michael Saylor's announcement, Square announced that they bought $50 million worth of Bitcoin.
Yeah.
Is this going to be a trend? And a question which I asked yesterday on the show is this a purely US thing? Because we haven't heard any European companies or Asian companies come out and go, we're buying Bitcoin. Is this just a US thing?
I don't know. I think it's just a Michael Saylor thing at the moment, right? And Jack. So is anybody surprised that Jack is buying Bitcoin? I mean, his hashtag, he's got a hashtag Bitcoin as his sole bio on Twitter. So it's a small thing. The question as to whether more is coming, I would say the answer is definitively yes. And I think that it's important to address and understand that most companies can't do this. We have this sort of like pipe dream and fantasy about the Facebooks and Apples putting a percentage of their treasury. Bitcoin's way too small. the price of Bitcoin needs to be 40, 50, 100 grand. The market cap needs to be in the multiple trillions for them to actually be able to make a significant investment in this and know that it's liquid enough for them to be able to enter and exit. If you read about how MicroStrategy had to do this without significantly moving the market, it was like 16,000 microtransactions just to do it in one weekend. That's not something that the Apples and such are going to do. So I think, it's the natural evolution. We see the family offices, small crypto focused hedge funds, all of them gaining exposure. Then we start to see these sort of smaller but large corporations. MicroStrategy is a big company, but it's no Apple. And then once we get to the higher price, it's so bullish. You think about it because they want to do it but can't, and price needs to be higher. So these guys generally get what they want in my estimation.
All right. Well, they're all talking about Bitcoin. So all of these institutions, Michael Saylor, Jack, they're all talking about Bitcoin. But Grayscale kind of says that Ethereum is where the institutional money is starting to go. And what I did was I pulled out a Bitcoin Ethereum chart from the beginning of the year. And you can see that the ETC BTC ratio went up by 2x, which means that if you would have held Ethereum, you would have made a 2x return against your Bitcoin. So the question is, what's a better trade right now? Knowing that Bitcoin has reached a little bit more of a maturity, would you put money into Bitcoin or put money into ETH?
Ethereum is a far better trade, in my opinion, and it always has been, because it's like as a trader, it's like trading Bitcoin, but on right? I mean, you get this opportunity.
That wasn't me. It was the Ethereum community. Yeah,
that's cool. Yeah, they're cheering. Bitcoin is living out the narrative of digital gold, store of value, right? But Ethereum is a platform, and it's something that people are using and building on actively. So, you would imagine that you're going to see a price to reflect that. And even if you just want to make a average layman's comparison, we're sitting at the all-time high for Bitcoin, right? Which is around 20,000. Well, what was the all-time high for Ethereum? 1,400?
No, I think higher than that. I think closer.
Yeah. So, I mean, but we're not even halfway there, right? So even if Ethereum simply catches up, we're talking about a 2x to get to the same effective level as where Bitcoin is now. And I see that happening. So as a trader, I think Ethereum is a better trade. Strictly as an investor, I think Bitcoin is a safer investment.
Okay. So I have a Bitcoin stash that I don't really touch because I touched it in 2017. I invested it in altcoins. And when I brought my stash together, I had a much smaller stash. So I kind of made
less Bitcoin.
Much less Bitcoin.
More dollars, less Bitcoin. The old trader's gamut, and it's in crypto.
I had less dollars and less Bitcoin and less Ethereum and a lot of alts. I think I learned a big lesson. Question is, right now, would you take some of your long-term Bitcoin holdings and actually trade them for Ethereum? Because you've just said there's much more upside in Ethereum. I think that Ethereum has risk, but not that much more risk. And the question is...
I view Ethereum very similarly as a long-term hold, as you're saying. And it's the only other one that I would put sort of in that basket with Bitcoin. But I think it is a relatively safe investment. I always believed as a trader myself that I should have 70% of my portfolio in investments, 15% in cash, and only 15% for trading, even as a professional trader. And that 70% to me always was Bitcoin, that I viewed it that way. And now that's more of a split between Bitcoin and Ethereum, even for me. So I agree with that sentiment that it's generally very safe. And Ethereum is evolving.
Yeah, of course. Now you've got as I said, a big community. They're all trying to call in and they're chatting on the chat. They said, Scott, this is from James Yukonis. And he says, Scott, if you had $5,000 right now, how much into Bitcoin, how much into Ethereum?
I would dollar cost average evenly into the two, probably, or maybe like a 70-30, 60-40 split in favor of Bitcoin. But again, that's with an investing mindset and very long term. I would also encourage you to do that and not look at it. Right. Yeah. Call me in 5 years. So if you're the type of person who's going to look at it in a week, it's a very different strategy. Right. So I would say dollar cost average with some sort of rational split between the two, and ignore everything else if you have $5,000. That's not financial or investment advice.
You know what? One of the things that I've learned is to give my crypto wallet to somebody else. And so that if I'm tempted to make a rash decision or a quick decision, there's the whole headache of having to get my wallet back. And by that time, I kind of get, back my rationality. And often I don't actually make the trade.
I've gone even further than that. So you were talking about if you would take out your cold storage. I mean, I'm in 3 of 5 multi-sig and geographically separated. It would take me a week to send Bitcoin from cold storage, even with my own best effort and in context of COVID, which also means that if somebody wants to rob me and come try to steal my wallet, they're going to have to hang out with my family for a week and entertain my kids and travel all over the United States to hack me. But I've had to make it that way, partially just as a security measure, being hacked so many times and targeted so many times, but also, like you just said, that trade's going to be long gone by the time I can send any Bitcoin to an exchange.
And listen, if anyone's willing to spend time with my wife and kids and babysit the kids, they probably deserve all the Bitcoin.
That's right. I'll just give it to you. It's
Scott. So our viewers here want to know what it is that you're trading. They're kind of saying, look, if Scott is a trader, then let us see what he's trading. What is he looking at? What is he buying and what is he selling? So I'm going to give you a chance to look at your charts while I remind our community that you guys are the community. Please, guys, hit the like button, hit the subscribe button. We've done so well. We've doubled the show for the past 3 weeks. We've doubled the viewerships. And it's only because of you guys, only because you hit the like and the subscribe button. And then the YouTube algorithm does the rest. Also, remember, guys, this is a show where you call in and you bring the banter. This is where we've created this station so that you guys can call in and share trading tips, trading advice. And I see that we do have a call on the line. Visky, I'm going to come to you just before we let Scott bring up his graphs and charts, which we all want to see. Visky, you are not live on air because you're reconnecting your device. Let's go into your graphs and charts. So let's look at your graphs and charts. Tell us what it is that you're trading. I'm going to share your screen.
Sure.
What are we looking? We love.
Well, of course. Yeah, you're going to be surprised. So the simple answer is that if you follow me, I believe that no trade is probably the most powerful trade that there is. So you don't always need to be in the market. And at times like this, it's better to sit on the sidelines. And that's largely what I've been doing. So I'm not aggressively trading. But, we asked for a little clickbait. So I can tell you that what I have been watching and sharing, and something that I made fun of and thought I would never share, but I like money, food coins, sushi. Yeah, I made fun of it the whole way down, but I bought it, right around here, about $1.70 when we broke through this resistance here. And now, if I was looking to trade it again, this is sort of the path that I would be watching. I think that this is a really key resistance area with heavy supply, lots of selling. You can see actually that if you draw this supply off this candle here, that you have the EQ of this channel. And that's exactly where we've seen these tweezer top sort of rejection. So I wouldn't really touch this unless we see a clean break above and take a retest of it as support. And that's what I've been actively trading. Go ahead.
What levels are you looking at there before you would either buy or sell your sushi? And full context here, last week on the show, we had Altcoin Psycho. He called this thing up to $7. He thought it was probably the most promising trade out there, and he combined the fundamentals and the technicals. So as a show, we bought it. Our viewers bought it. We bought it for our show fund. We bought it at $2.20, and now we're holding a bag of sushi. What do you recommend? When do we buy or when do we sell?
Well, okay, first some context. He's a good friend of mine and we discuss trades pretty constantly, and he actually shares trades with my newsletter. And what was really funny is I posted a sushi trade and then he didn't read it that day. And the next day he sent me the exact same sushi trade that I probably shared with you guys. So we were on the same level without even looking. But at this point, as you know, and people should understand this as a trader, I would be more interested in buying higher, not lower. Right? You buy the bottom, sell the top is the dumbest meme in trading. You can buy high and sell higher and you still make money, right? So I would say that what I'm looking for here is a clean break through like the 260 area. And then I would buy a retest with scattered orders between like 230 and 260. And if I miss it on the way up, then so be it. I'm already in. But rationally, I mean, you know, depending on your time frame, if you're a day trader and you bought this where I did, 170 something, 179, you could be selling right now, right? This is resistance. So you bought the support, you sold the resistance, maybe buy a little lower. So I'm more interested in seeing a confirmation of bullish continuation here. But I mean, the Bitcoin pair looks good too.
Scott, just go back to that chart because
no problem.
We have a whole lot of viewers who are asking questions here. The problem that I find with charts like that is if sushi goes from 220 to 260, I FOMO in because I think it's going straight to $3. And most times
never does.
It never does. It never does. So when do you know, or how do you know whether this thing's going to continue running or whether there's going to be like a big pullback?
I don't. And I'm not going to pretend that I do. And nobody can look at a chart and tell you that. And if they do tell you that they know what's going to happen, they're trying to sell you something. So what I do is I generally just move my stops up and lock in profit and let the market sort of decide for me, right? And that's something that you learn to do by feel and with a lot of time. I can't tell you how many times that's caused me to stop out right before price rocketed up, but at least it was stopping out in profit and not having the same thing happen where you stop out of a coin right before it rockets at a loss, right? So I would say that still for me, it remains logically intact, this idea anywhere above that blue line where I entered at this moment. But, if we start seeing sub $2 and stuff, I would probably consider selling because that would be, somewhat lower than like these candles here where we saw this push. That would be a pretty clean rejection if I saw price sort of down here. And you could like rationally, I haven't looked at it, but you could probably draw, a pretty clear line. And again, like I draw lines, but they're really zones, so I would say that anything this will be messy, but through here is support now.
Okay, and that's for our viewers who are listening to us, or for our listeners, that is at around 170, right?
Yeah, it's from 178 up to, just under $2, right? So, but, if you're trading it really locally, I think this is going to go up, to be quite honest with you. And I don't disagree with his targets. You just have to have patience. And right now it happens to be at resistance. So just because somebody says the name of a coin and they think it's bullish, you need context. It's not bullish at this exact second for a buy.
All right, I want you to jump. I see that you got the XRP USD chart open in the window there. We've got a lot of viewers who are watching XRP primarily because of the airdrop that's happening on the 12th. How would you be trading XRP USD?
Well, I wish I had my old charts because I can confidently say that I was like the first person that was calling this all the way down here, and people, and I was taking just the beating of the century on Twitter for calling XRP, and it went. It looked like very clear consolidation and accumulation, and that big move was coming, and I capitalized largely on that. Although I was out like down here, I did not catch the entire move, to be quite honest. I caught about half of it. So at this point, I would say that we have a clear sort of form of bullish consolidation. You could draw what I don't like, I've seen a lot of people draw this pennant, which is not technically inaccurate, but when you have a pattern like this, you never want to see it coming to the apex. It basically invalidates the pattern. Any symmetrical triangle, pattern, pennant, flag, you generally want to see a triangle like this. You generally want to see it break out 60, 70% of the way through because that's a better indicator that it's valid. We've all traded these before where you get really excited when it comes to the apex, and this is what you get, right?
What are you saying? Yeah, well, that's exactly it. Is that what you're calling for XRP now? Are you calling it?
No, listen, I don't like to make calls. I like to tell you if something happens, then this is how I would play it. And I'm telling you, if I get a clean break of this resistance and a retest, I would be looking for something like this. But I'm not interested in trading it unless I see a clean break on volume of this upper black line at this point.
And where is that upper black line? What's the level? Sorry for our
right now it's about 50. At this point it would be about 60 cents, but the beauty of descending black lines is they get lower, right? And that's why I love taking trades where actually your support is like, this line is not what I'm talking about, but again, I'll put it back. But like, if say this broke out and you took it here, if this is your support, you have a rational reason to continue raising your stop as price moves on, which to me is a really favorable situation because like if I have my stop right here, say, if you took a trade right now and put your stop, let's say like in this area or something, let me turn that annoying magnet off, right? Well, if price even leaks out and comes up here, well, then I'm just going to trail it up behind that line as support and slowly into profit. So I love a trade where I have an ascending support that I can use as a trailing stop.
Alrighty, Scott, we are running out of time because we're going to bring in Crypto Burb and we're going to be talking about the
Burb.
common mistakes that traders make. In fact, we'll keep you on the line for a little bit of that. Let's do one more coin, and I'm going to bring in Burb. Burb, if you're around, welcome. We are going to sit and talk to you about the common mistakes that crypto traders make. Scott, one more coin while Burb joins us.
Sure. The only other one that I've been watching is VET. And it's more of this macro setup, which I've been sharing for ages. We had this major break of this descending downtrend that we've had since July 2020 after the large move up. And now, we've seen the break and we're seeing sort of, as of yesterday, I would have drawn it like this. It's the beauty of lines. They change. And we're seeing that catch a support, but you could also kind of draw it as an ascending triangle. Regardless, we're having, some nice bullish consolidation after a breakout, which is what you want to see. So, I know it's crazy, but I would say that, technically from a chart perspective, we should see VET heading over time back up to the 230s, 240s here before making another decision. But there's a lot of stops along the way. And I always like to preface that. If I'm trading this right now, I took it from like 80 something. I'll be exiting part of my position at, just over 100 at this next blue zone. So let the rest ride. Burb, my man.
Amazing. So we got Burb on the line. And what we're going to be talking about now is the top 5 mistakes that crypto traders make. We all make a whole lot of mistakes. It costs us a lot of money. And we think that Burb can teach us about the top 5 mistakes that crypto traders make and how to avoid them and make you guys more money. But if you want to see this next segment, what I need from you guys is I need you guys to pump the likes and pump the subscribes. Come on, guys. You've helped us so far. We've doubled our views every single week. We've got an amazing segment for you, guaranteed to make you money. But we need you guys to hit the likes and hit the subscribes because that's what brings the viewers into our show. Burb, so good to see you. We had a great session with you last week. And today we're talking about none other than the biggest mistakes that traders make. Scott, what's the biggest mistake that you make? Other than listening to your wife. Other than listening to your wife or not listening to your wife.
I was going to say, you got that one. I can see why you want someone to watch your wife and kids if you think that the biggest mistake is listening. Not listening to my wife. That's your definitive answer. At this point, I would say that the biggest mistake is still the instinct to overtrade. Sitting on your hands, I think, is the hardest skill as a trader, no matter how long you come. And I'm pretty good at resisting that urge now. And as we talked about before, I've put systems in place where it makes it very difficult. But there's some mornings you wake up and you just want to make some damn money and the opportunity is not there. And you need to force yourself to accept that and not go ahead with any crazy trades. But I've been through, if you guys list 50 things right now, I'll tell you that I've done every single one of them in the past.
So I'll tell you what my biggest vice is when it comes to trading. And that is that I watch a token go up. And then I say, if it crosses this line, I'm going to buy it. It crosses the line. I say, if it crosses the next line, I'm going to buy it. And I keep going up. And I always land up buying the top. And I think I'm getting better, but I think I need some help from you guys. Burb, is that a common mistake? Let's talk about the mistakes that traders make. Let's help our traders make money by avoiding making big trading mistakes. Scott, if you can stay on the line, because I'm sure that you have a lot of insight to add into this. Burb, talk to us. The biggest mistake that traders make.
Yeah, how's it going, people? Good to see you, Ryan. Good to see you, Scott. How's it going, guys?
Hey, man.
Good. I definitely can confirm, that there are many very common mistakes. Actually, the most common, very often for the normal distribution, let's say, of statistics, for what mistakes people do, tend to do in the market, tend to make. Everybody can relate to some extent with them, because they are so often, right? So you mean like buying the top? I went back in the early days, a couple of years ago. I was very familiar with buying the tops, right? With buying the tops, although it was a local time frame, local, let's say, time horizon. They're not like the generational tops that you bought, 2017 peak of Bitcoin or something like that. There are mistakes that everybody just simply make, right? Just like Scott said, also like overtrading, right? Overtrading is your psychological way to kind of like counter, just your losses, right?
All right, so I'm the world champion of buying the top. How do we prevent that? What would you say? What are the buy signals that people need to look for to know they're not buying the top? Because you're kind of balancing this. You see a token running. You say, should I get in? Yes, I should get in. Let me wait for it to confirm. It confirms. You then, what do you do? How do you guys as traders avoid buying the top? And let's call that mistake number one. For our producers, if you could put a little sign at the bottom of the screen, mistake number one is buying the top. How do we stop buying the top? What do you guys do? How do you guys, what's the psyche behind it?
Yeah, so I gotta tell you, first of all, I think that positive mentality that you're having, like you're saying that the glass is half full rather than half empty. Even if you buy the top, you're the world champion at buying the top. So I love it.
I'm the world champion of buying the top.
Yeah, but honestly speaking, the couple of points that I wanted to bring today to kind of like correspond with your question is the behavioral finance. Because we as people tend to rely much more on our emotions rather than rationality, right? For most of the day, for most of the time. And there's something that is called perception biases, right? When we kind of like distort our perceptions, the way we perceive the world, or the way we kind of like feed our brain with information, and we filter that with our kind of like emotional feelings and just the states, right? We're often driven by fear and greed.
So it's like if I want sushi to go up, and I do want sushi to go up because I bought it, then I'm going to filter out all negative information. So
exactly.
if Scott tells me that sushi is about to go down, I'm going to filter him out, and I'm going to listen to altcoin cycle.
Exactly.
Sushi's going to 7 days. So you call that?
That is exactly what we call cognitive consonance, right? So you pick out only the opinions kind of that are in correspondence with your own opinion, right? So that is being selective and picky about what you actually listen to, just to confirm your own bias. So that is also psychologically kind of like proven and confirmed. So glad we worded it out this way.
Scott, do you still do that? I mean, you must know, the rules, the mistakes.
No, I don't generally do that anymore, but I have so many more times than I can count in the last few decades. I've done that, but I would say that the simplest way first is a recognition of your emotions, as he touched on. There was literally a time where I decided I would sell something if I felt like buying it. And anytime I was really scared and felt like selling something, I would buy more just on principle, literally counter trading myself. And it was an effective strategy. But the other answer is, as a trader, if you want to trade on a confirmation, if you can mentally accept that you might miss something, when resistance breaks and price is above it, setting your order at or just above that level so you don't get front run, but as support, and then accepting that you might miss it is usually the best way to avoid that, because then you're only buying when price dips and you're never buying it on the way up. You might miss it, but 7 times out of 10, it'll come down for that retest and you'll catch an order, and then you won't feel like the idiot who, you just don't want to be the whale's liquidity. That's the bottom line. And the exact emotion that you're describing is what they need to be able to sell size. They need somebody to buy the top, right?
Okay. That sounds like it's a huge mistake that's made. Burb, next mistake that most traders make. I have one that I want to throw into your thing, and that is having to trade, or FOMO of missing a trade. So I have this thing that you'll tell me about a coin, I'll watch it going up, and I'll start to get this extreme FOMO. Why didn't I listen to Scott? Why didn't I listen to Burb? And then it keeps going up, and then I beat myself up for not taking that trade. Is that a common thing?
Oh yeah, yes it is. And I mean, I tell you what. I mean, again, every sort of like irrationality that comes from comes into our actions comes from the phenomena that are actually explained by the behavioral finance, right? So just to name a few, within the same perception biases, you have a thing that is called saliency, right? So that when you sort of like just subconsciously assume that because something didn't happen like very recently, it's never going to happen. Like that's the way that people don't really ever expect market crashes to come, because the trend just keeps continuing, just keeps growing, right? You would never expect that it would make crash one day. So it's actually a very similar case with I don't know, like when you're living in a floody area, right? When there's a lot of floods and everything. So that why would you ever decide to buy a flood, just insurance okay, well, you will not buy that until it happens, right? And that's actually because of the saliency, because you believe that when something hasn't recently just simply happened, then it's never going to happen, which is very wrong. So that's the very first kind of like just sign that pushes, and pumps the FOMO into effect, right? Because you would never expect that, well, market just can make a turn, can make a twist very rapidly and very sharply, right? Because it just keeps growing. And that's this lack of sort of like a very fresh way of thinking. Again, that is called saliency, right?
Saliency. And that is
saliency,
that's just to confirm that people think that just because something hasn't happened, it won't happen. And when something does happen, that it actually will happen.
Yeah, sort of. And on top of it, you have the framing, right? Framing or phrasing, which is another sort of like psychological trick effect. So that when you, for example, like people per the nature, like for any sort of like decision making, you can work towards the pleasure or away from pain, right? So you can choose, like the stimuli for our actions come either with the sort of like will or sort of like fear, right? Greed or fear. Again, there are two extreme opposites that are always sort of like pushing us to make just some actions.
That's human nature, and either what I think I'm hearing you right. What you're saying is your human nature and your human emotions don't change. You're either running towards profit or you're running away from loss.
Yeah, exactly. And that's the point. And see, just a question, right? If you prefer to win, you have 50% of let's say winning $1,000, right? Then use one option of saying that is, would you take a trade if you have 50% of winning? Okay. And the other option of saying the same is, would you take a trade if you have 50% of losses? And people will naturally strive away from losses, and they would just choose, this safer option for winning, right? Which exactly just pushes psychologically again us as people, to rely on FOMO because some fancy head just said something crazy on the internet, right? So again, lack of knowledge, which often is the base, for lack of rational, is what distorts your perception, what actually just pushes you to make irrational decisions and rely on very often unreliable sources, again, just to fit your own kind of like opinion, right?
Scott, I want to ask you a question. The last bad trade that you made, if you want to, take us through one where, I don't know if you lost a lot of money or whether you felt it emotionally, if it hurt you, but let's look at the last bad trade that you made. Now, guys, remember, this is a very experienced trader. I'm really keen to hear the type of mistakes or the biggest mistake that you made recently.
So first, it's really important to define what a good and bad trade are, because a bad trade is not determined by losing money, right? I have taken plenty of great trades where I lost. If you take the assumption that you don't know what's going to happen in the future, then you should be approaching every trade with a plan for when you lose, not when you win, right? You don't buy your Lambo, you try to protect your capital. So you take a trade that's as close to an invalidation level as possible with the idea of losing as little as possible, assuming that the trade is going to go against you, right? So to me, a bad trade is a trade where I do not execute my plan, even if I make money, right? So trading your plan is a good trade. Violating your plan mid-trade is a bad trade. So recently I did have a link long, and the reason I would view it as a bad trade is because my plan was to increase my stop loss with price, and it was going my way. But then in a very amateur sort of move, in my mind, I noticed another line where it could find support, and I left my stop loss where it was. Now, I only lost the predetermined amount that I intended to, but my original plan was to lock in profit as price went on. And when I saw it break sort of the ascending line that I was watching as support, I did not exit. I could have exited basically even. And instead I took that, 0.75% portfolio loss. So again, it's not the loss or the gain that defines a trade as good or bad. It's your ability to manage it the way that you planned. Because when you decide to take the trade, you are not generally emotional. It's when you see that loss coming that you make an impetuous decision that's bad.
So what I'm getting from you guys here is it's not about gaining, but it's actually about protecting your losses.
It's about not losing.
It's about not losing. So you're
losing is
not losing much.
As winning, pretty much.
It's about losing. It's about losing a predetermined amount that allows you to keep your capital. So I literally approach every trade as if I'm going to lose a certain amount.
Okay. That's a brilliant way to look at it. You approach every trade as if you're going to lose it, and you see how that feels. And that way, if you do lose it, then it's part of what's happened. Now,
life generally goes on, even after you lose.
Yes, if you have the discipline. Because what I found that I do is I draw a line and I say, look, if this happens, I'm going to sell. Sushi is a perfect example. I bought sushi the first time at about $3. I said if it goes under $2, I'm going to sell. I ended up selling my first bag at 70 cents. And I bought that same bag back at 220. So what do you guys do? And you guys are both very experienced traders. What do you guys do about stop losses? So we know that a stop loss is designed to do exactly that, protect yourselves from losses. But there is a big temptation to not trade against your stop loss or to remove your stop loss. Now, one book that I read, it's called What I Learned Losing $1 Million, which was absolutely brilliant. It changed everything it changed the whole way of how I trade, and I've become a much better trader since. But what it says is, if you have a stop loss, give it to someone else to execute for you. And so that means that if you want to have a stop loss, Scott, you would give it to Burb. And that means that if you wanted to remove your stop loss, you'd have to phone Burb and admit defeat. And if that happened, that would make you feel embarrassed. And that emotion would 9 times out of 10 stop you from removing your stop loss. What techniques do you guys use to make sure you respect the stop loss? Because I always get hit.
First of all, I always call Scott for confirmation for my trade. Exchange opinions, right?
Yeah, of course.
But most certainly, I mean, listen, it all depends on the actual strategy and plan that you're executing, because when you're a position trader or, buy and hold strategies, the one that you pick, just with actually passive, just sort of like management of your portfolio or your equity, then you don't really are not really bothered much with the stop losses, because the amount that you apply, into the position is actually a natural stop loss itself, right? Because when you sort of like, when you're a longer term trader, you choose, rather than having 50 trades a day and everything, you just decide to have, let's say, 1 or 2 or 3, maybe 4 types of assets or asset classes that you're pretty much like deciding based on a fundamental analysis that is undervalued or to what extent it's undervalued, and you just simply stick with the plan. Especially if it's lower volatility, then the market just keeps trading better, right, and safer. So by applying the proper amount of position sizing to that, this is sort of like the natural stop loss, because if you lose and the position is well sized, then it's not going to cost you much more than intended. That's the first place.
That's an excellent point, and that is to respect position sizing and not to what the crypto community calls ape into a trade. Scott, when you take a trade, what kind of percentage of your trading portfolio, not your long-term holding portfolio, kind of like what are the quantums of your individual trades relative to your trading portfolio?
Never more than 2%.
2%.
Yeah, never more than 2% risk. That doesn't mean, right, I could be risking the entire portfolio with my stop loss 2% below that, or it could be a much smaller trade with a much wider stop, but about 2% of my portfolio, but generally now well under 1%. Like I said, that link trade, I took a 0.75% and could have been a 0, but I don't really risk much. But that's a function, just like you were just talking about. Your stop loss is your trade. I mean, literally the first thing you do with a trade, your position size comes from your stop loss, not the opposite, right? So like you decide where your trade is invalidated and everything else is calculated from that point. So I'm waiting for price to get as humanly close as possible to that before I take it.
So your strategy actually says that the most you can lose of your portfolio is 1 or 2%, but you ride winners huge to the top, which means that effectively, if you follow the strategy, you need to have 50 bad trades in a row, even more, to lose your portfolio.
Yeah, that's correct. And assuming that there's never a success in there. I mean, listen, the best hitters in the history of baseball who get paid hundreds of millions of dollars hit the ball 1 out of 3 times, right? You know, and that's how I think traders should approach it mentally. Is that Dustin?
It is
family.
My brothers. Hey guys,
I saw you on the chat, and I thought I got to bring you in. You can talk to us about a lot of the trading mistakes that you make too, because you're also a trader.
Oh man, I am a terrible trader. But I will tell you that Scott gave me some counsel and Burb gave me some counsel long ago that even the best traders are sometimes wrong, meaning they don't always win. And what was shocking to me that when I had asked Scott saying, you're telling me that there are times that you actually lose on a trade, he goes, oh my gosh, of course I do. And I think that is one of the areas that to the people like me that look up to Burb and Scott, that we need to hear is that we're not always going to win. Sometimes we do overtrade, but it is keeping us from that FOMO effect is what these two do best to kind of reel back in the emotions.
Okay, so tell me about your last really bad trade where you want to beat yourself up over it. I mean, we've all had them. Give me one that you've done. Tell me about what happened. I guess we've all had them. I want our viewers to feel like they're not alone. If you saw the chat lines are going crazy. I mean, these guys are looking at you guys and going, please help us, please help us.
They're studs. I mean, they're absolute, they're studs. I mean, look, we all know that Burb's a bit of a diva, but for the most part, I mean, he's...
WTF.
You know, it's interesting. So I am one of those, when I got into crypto, I had believed because somebody had told me there was going to be this price point on XRP that it would be $589. So I overpaid in the early days, which now I am quite excited to say that what I believe to be my worst trade, not that I exited it, was XRP. I'm now finally break even. So I am very excited that I got hands of steel.
Wow. So hands of steel, so ability to hold. Guys, how do you feel about holding bad trades? So, you know, you buy the trade doesn't do what it should do, and then you kind of land up being married to the trade. I tweeted the other day that, you know, making money in trading is it's strictly about removing emotions and not about loyalty to a specific coin or a specific trade. I've often found that I buy something as a trade, the trade messes up, and then I become a fanatic part of their community, you know, like, hey, like everybody should buy sushi because, you know.
Nothing makes a community member like necessity and desperation.
Yeah, but I'm very glad, Ryan, you actually brought it, you know, to be honest, because that's exactly another point that I wanted to bring anyway. This is called one of the inertial effects, still from the behavioral finance. I just tried to keep it from behavioral finance today, but this is called endowment effect, where you kind of like resist when you were sort of like, you know, when you treated yourself with some purchase, with some coin, and you just refuse to give it away because it's yours, because it feels like your property, and you just feel bad for losing your property. And this is what endows you actually to stick to the losers. And that's one thing. And aversion loss and just the inability to admit the mistakes, right? Like not being able to face the truth is exactly what makes you just keep losing for 90% on the downside.
Scott, under the assumption that you buy Chainlink, for example, and then the trade goes against you and you decide to break your golden rule of a stop loss, and you're now holding these coins at a lot lower than you paid. Do you then start digging up and doing the fundamental analysis and then saying, well, you know, Chainlink is going to be the future of Oracle, and, you know, everybody's using Chainlink and DeFi is powered by Chainlink, and therefore I'm not going to let this one go, and then I'm going to keep riding it all the way down to the bottom? So
two things. And Link's a great example because I trade it, but I also hold it. So like I have sort of a bag of Link that it's, you know, I'm indifferent to, it's going to do what it's going to do. And then I trade it. But I can say that at this point in my life, I've learned what you just described is never going to happen to me again. You know, I've done that in the past. You know, in fact, I would almost recommend that if people have an emotional attachment or a true passion for an asset, they should invest in it and never trade it. Right. They should never treat it as a trade because what you just described is somewhat inevitable. Yeah. Right. Like giving up a kid for adoption or something, you know, it really, it's as he said, is endowment. It really is impossible. That does not happen to me anymore. But what you just said is so funny, because you could buy sushi, not even know what it is, and then become very passionate about it when you're 80% down. And if you can recognize that in yourself, that won't happen.
So I find that 80% of my long-term portfolio is actually altcoin trades that went bad. And those are now become long-term hodls for me. And then I start justifying, why these coins are going to be amazing. And, one thing that I did was I broke up with my 2017 abusive altcoin relationships. And that
all
I
of
only
them?
Did. You're in the bird's nest, aren't you? I mean, I'm telling you this.
Which coin still has you locked in the basement?
Wow. Okay. I love, I don't know if I should do this because, I'm going to do it. I have two that I have been struggling to break up with. And the two coins are EOS and Tezos. Both of those are my 2017 bad, abusive. In fact, there's a third, Wax Protocol, a Wax token. Those are my three abusive relationships. And the reason why they're abusive is they never move when the whole market is moving, and I just can't seem to let them go. And I think the reason why I can't let them go is because knowing that EOS was once at $17, I just can't let it go at $3. And knowing that Tezos was recently at a $6 local high, I can't let it go at under $3. And so I guess many other traders probably have the same thing. Burb, what is that? What's happening to us emotionally, psychologically when that happens? Why am I attached to these coins that don't move and that, to be honest, I don't really care about?
Yeah, so again, there are two things. One is this endowment effect that I already mentioned, right? That kind of like just presses you not to give away what you already got. Now, this ownership paradox, let's say. And on the other hand, you have something that is called status quo effect, right? So that when you sort of like choose inertia over any sort of like activity because you're afraid to make mistakes. Because if you already made the mistake, then you choose to kind of like, stay flat, not to make any additional move because you risk kind of like making two mistakes instead of one. So this, again, loss aversion is what keeps people just holding the assets that don't move. Well, there are so many shitcoins, back in the day when I lost, like all my holdings on Cryptopia due to the hack, right? Jesus Christ, I mean, it was crazy time when the Cryptopia, just coins were rallying like 10x daily. It was crazy. Now, all of that is gone already because of the hack, so it doesn't matter. But again, risk management and the losses, can come and hit you from different places, not necessarily from the trade alone, right? So just the security, as Scott knows perfectly as well.
Oh, and you know what? There's a caller here that says, Neo is my abusive relationship. Up until about a week ago, Neo was my abusive relationship. I broke up with Neo at $18.50, and I put that money into sushi. And to be honest, I feel liberated.
I was literally waiting to make this point. Is you hold these coins forever, the fear of losing is so much worse than losing, right? It's the emotional attachment. It's actually the admission that you were wrong that keeps you. It's this need to be right and wrong, which are the enemies of traders. Right and wrong are completely irrelevant.
It does kind of feel though a lot. It does feel a lot though, Scott, like religion, that everyone believes that theirs is the true one. Is it not?
You can't be trading something that you believe is the next Jesus coin, right? It just doesn't make sense. You're not gonna be able to trade it objectively. But yeah, how good did it feel when you finally did it though? Right? So you come to realize that the loss doesn't actually hurt. It's the idea of the loss that hurts. There are people right now who are probably 90% down the bag. Let's say, like you said, EOS at $3. If I told you with 100% certainty, which I cannot about any coin ever, that say Litecoin was going to double in the next week, and I said, but you need to sell that bag and do it, there's probably 50% of people out there who wouldn't even be able to release their bag knowing that they could double that money on another asset because they feel like they have to get it back on that coin.
I did that. And I can tell our viewers and our listeners, it's the best feeling in the world when you sell an abusive relationship and you get into another relationship with a coin and that coin runs. There is no better feeling in the world. I mean, it's the most liberating, most rewarding feeling in the world. I encourage you guys all to do that. So let's do this. First of all, what I want you guys to do is all to hit the like and hit the subscribe button. I'm loving this discussion because, these are real things. These are facts. This is what we all do every day. Please, guys, hit the like button, hit the subscribe button. It makes our content visible to more people in the crypto space, and we can help them. So now what I want you guys to do, I want you guys to take your 3 alt abusive relationships. I want you to write them down. And straight after this show, you guys are going to dump your alt abusive relationships, and you are going to replace them.
Is that financial advice?
And you are going to replace your 3 abusive relationships with the following coins that Burb is going to tell you now. Burb, what are the 3 coins that we are replacing our abusive relationships with?
Oh, Jesus Christ!
I'll let you think about it.
And Burb, if you didn't tell us in the nest beforehand, I'm going to be very disappointed with you.
I know. I gotta watch out, man.
All right, so
no, but this is actually very simple again, because I would always recommend to anybody, because 90% of people who chooses to day trade, they would always lose money. They will be the liquidity providers, just as Scott said, right? And it's statistics, right? Because you believe in different sort of stereotypes that you see in media, that if you're not sitting in front of 10 fucking screens and monitors, being 24/7 in front of 1 minute candles, then you cannot call yourself a trader, right? That's a stereotype. And actually, the best investors, look at Warren Buffett, right? Try imagining him just sitting in his fucking basement, for day in, day out, glued into his screen, 100x leverage and so on. This is not how we trade, guys, right? So to start with, I would always recommend, longer time perspective over the shorter time, because of the safety and security reasons. But then you would have the projects and the assets that are actually undervalued. And one of them I keep repeating is, by the cyclicality effect, is the Litecoin, which is out of question to me, right? Litecoin,
amazing. Litecoin. At this point, I'm going to stop you guys, and I want to say the following to you guys. First of all, welcome to our show, Andrew. We see you there. You're on the panel. We're talking about common trading mistakes that people make. Burb, this was inspired by you. And it was actually your Litecoin call and altcoin Psycho Sushi call. And so what we decided to do was to create your crypto Banter fund, which is $100,000 fund, which we are going to post publicly on our website when our website is up again next week. And then we're going to have a $100,000 fund, which is going to be powered by calls only by the calls that are made on the show. So right now in the fund, we have Litecoin, we have Sushi, we have Ethereum, we have Bitcoin, and we have USDT. What else?
Wow, that's already too much, man.
Scott,
I would stay safe over there. Yeah.
Scott, where would you put?
I like that. I think you got a great portfolio.
But I feel
that's the beauty of it. You don't need to add anything. Sometimes you just gotta, sit back. The beauty of trading is, once you've got your bags full, you can go about your life, go fly fishing or learn a hobby or something. You know what I mean? If you were buying Bitcoin at $4,000 in March, what the fuck are you doing trading right now?
But I feel like I'm unproductive, man. I feel like I'm not doing much. That's the problem.
So then go learn something, read a book, study some trading knowledge, study your emotions. That's a professional trader does not trade all the time. I interviewed Peter Brandt the other day, and he was like, if I spend 10 minutes trading a day, then I've overtraded my ass off. He never takes a trade during trading hours. It's always a bid or ask that he's set when the market was closed, and he goes about his day. And that's really how a lot of professional traders trade.
Exactly.
Okay. This is a great thing that you're saying. I think what you're saying around Peter Brandt's approach is spend a long time thinking about and planning your trade, and then execute it, and then leave. Execute your trade, put in your stop loss, and go to the beach.
He's or don't necessarily go to the beach, but he's like, I wanted to see, he's like, today I'm interested in what iron ore did in China in 1975. So I'm going to go check out those charts and see if there's any corollaries to what's happening today. Go through historical charts, learn something, read a book, but don't trade.
Exactly. On top of it, I just want to very quickly add that if you compare trading with any other activities, trading is probably one of the least productive activities you can come up with ever, right? The only productive aspect about trading is just putting the buy button and the sell button. That's it. Rest is just shit from the productivity point of view.
Yeah.
So
wow, this is amazing, because everyone thinks that traders are about watching numbers and getting in and out of trades. What you guys are basically saying to me is that no, trading is about doing a whole lot of research, including graphs, charts, buyers, sellers, liquidity, maybe even fundamental analysis. And then what you're saying is the actual trade part of it is a very small part of the day.
exactly.
There I was thinking that I should be sitting in front of my screen just executing trades all day. Man, I even got reading glasses because I couldn't see the screen. So
it's so funny. I always hear people like refer to outliers. You know, Malcolm Gladwell, you need to get your 10,000 hours to be a master of something. Staring at a chart and watching things go like this passively does not count as hours towards your mastery of a craft, right? And people think that they need to sit there 10 hours a day and stare. What are you doing? Like, what is it? What's going to happen that's going to change something for you? And if it does change something to you, how is that not just an emotional, impulsive decision?
all right,
And
so
on top of it, just look that this is actually a lost time, right? This is a time that could that you could get busy with earning or improving your actual skill and craft and master, just in this area to learn more. Like, instead of just being glued to, for 10 fucking hours straight in front of your monitor, you could just read a couple of books in that time, right? To get better and better so that your execution just takes less time and you save money on that.
Or, okay, do you guys look at Telegram groups before making a trade? Where do you get your trade ideas from? Like, I sometimes sit during the day and I think, what should I trade? Where do you get the ideas from? Do you look at tokens that are moving up? Do you have some kind of indicator? Our viewers, a lot of them are going, hold on, how do you know that you should be looking at Link? Or how do I know that I should be looking at Litecoin? What do you do? Andrew, I see you nodding. Do you make trades like this?
I try to avoid it because I'm terrible at it. All these things these guys are saying, I've done. This is like listening. Sounds like an intervention session right now
for everyone.
Yeah. No, I'm much more of a fundamentals guy. You'll find me spending time reading white papers, and that can lead to its own mistakes too. You can have the best white paper in the world, but the team just can't execute on a vision. There are flaws with any method, but me, I'm gonna scope out the team, scope out the concept, make decisions.
The next segment with you is going to be very exciting because we are talking about Ethereum and Grayscale and what Ethereum is doing. And we're going to talk about the synthetics trade, the mirror protocol, and the whole lot of synthetics trades. Guys, before I let you go, first of all, the lines are going crazy and the guys are saying, what are burbs to other calls? What are burbs to other calls? Everybody wants to know what your other two calls are for trading. Before we get to that, I want to bring up one more mistake that I think that I make. And I need you guys to help me because I keep making the same mistake. And the mistake goes something like this. I buy gold. I have a bad trade on gold.
Yep, there's your mistake. Sorry.
Okay, so I buy gold. I have a very bad trade on gold. And then what I do is I go back into gold because I now need to make my money back on gold.
Revenge trading.
Revenge trading. Okay, talk to me about revenge trading.
That's exactly the phenomenon that I was sort of mentioning before, is that if I told you that another coin would do better, you would probably still sit in the same one because you're emotionally attached to it. You do not need to make your money back on the same asset that you lost it on. And that's the most important thing. But I used to have a rule. Now I'm emotionally stable enough to violate this rule on a regular basis, and because I'm just doing a lot of analysis. But after closing a trade, winner or loser, I used to close the chart for 24 hours and even to a point like remove my access to an exchange where I could buy it so that I could not execute another trade on that same asset for 24 hours.
Holy, okay. So, Burb, what do you do to avoid revenge trading against the ex-altcoins, the ex-abusive relationships?
Yeah. So I tell you what, I generally always choose to be super busy, right? Because I believe in building and delivering. So I'm like most of the day, I'm just busy. So I don't really have time to counter trade, right? And that's the best way out, so that you kind of like don't trade to keep you entertained, but you only trade to kind of like just make money or lose statistically, right? But again, so just keeping yourself busy, right? Many people would go, just to trade, right? Just to get this adrenaline kick, because they're, I don't know, like too lazy to get out of home, or they're kind of like, just to too lazy to try new things, right? And they prefer to get entertained over trading, which is rarely ever profitable this way, right? So find some activities, right? Do some physical activities. Jesus, I mean, there are so many ways you can actually avoid to just like being exposed to just being pressed, sort of like to just, I need to fucking click this button, because it relieves the emotions when you do that, right?
So don't let your last trade affect your next trade at all. Like don't let your last trade affect your next trade. You don't.
It's impossible. It's impossible to do this. It's impossible to achieve this. Yeah, I mean we can strive towards that, but again, behavioral finance would say that this is this entire prospect theory, and that as opposed to the efficient market hypothesis, you would efficiency in the market would say that you would make the trades rationally, with no emotion, with no attachment between one and another trade, right? That every trade is rational and is different, and you just approach it separately. What reality shows that it's completely impossible, because you actually feel all of these effects that I mentioned today, psychologically speaking, and you just attach them to the trades, right? Which makes it impossible to separate them from the psychological point of view, which again makes it impossible for you to kind of like keep them as separate as you would wish.
Okay, we had a caller on the line, and I guess he probably wanted to talk about something like that, but he saw his face and he went off the line. Guys, this is fascinating. I must say, I'm glad to know that you guys as big traders make the same mistakes that I make. I'm glad to see that we're all human and that human emotions are actually governing our trades. Before I let you guys go and start our next segment, we need to get those calls from you guys. I need to know from you guys, if I'm breaking up with my old altcoin relationships, what is it that I'm buying? Burb, you said Litecoin. Our viewers are relentless. They won't let us go until we're done this. So what are we buying?
Yeah, so I prefer the high caps. I just simply prefer the high caps, right? But then to boost the equity curve, you would have the mid caps, so you can go and just invest in some DeFi to just boost your equity. But again, the DeFi is itself like in leverage, so you don't need to put that on leverage additionally, right? When you go spot, its volatility is big enough to kind of like give it the leverage, right? So you can go and literally just get some, DeFi coins, right? I'm very big, just fan of YFDI, for example, right?
YFI or YFDI?
YFDI, I'm the same.
YFDI, an amazing project, So, yeah.
I did like a 40x on that already.
Yeah,
Okay, now what's the level of YFDI today? Where should we be buying it? I'm going to call it up on my CoinGecko or my Coin Market Cap.
Man, I wish we had talked a month or two ago when it was $40 or $50. Now it's $2,800.
The 2,800. Are you still saying that at 2,800? I mean, not financial advice, and of course, users are and viewers are encouraged to do their own research. But are you still saying YFDI at $2,800?
I mean, my personal target for it when I was initially, I can only say that. I'm not buying it right now at this point, but it's like 6,000. I think that 6,000 would be a reasonable target, considering the transparency of the project. They have systems in place that prevent rug pulls, literally make them impossible. It's just like, it's one of the few projects that I think you can confidently know that you're not going to go to zero quickly in DeFi. And the fact that we have to say that that's a good thing in DeFi is a whole nother conversation. But I just have a lot of confidence in their team, and I think it's a good product. So I'm not saying it's going to go there, and I'm not saying buy it today, but like I'm still holding a lot of it that I bought at $100 and below because I believe it can go there.
Wow. Okay. Scott, Burb's given us two calls. He's given us Litecoin and he's given us YFDI. I think we have to make it fair, and we have to bring you. We need a call from you, man. We need something tangible.
I thought we did sushi and vet, and showed you where we're going on Ripple. But,
that's why.
Well, there's other coins that I mean, just like there are coins I invest in fundamentally. I love UTrust, UTK. I think it's just an incredible project.
Tell us why you like UTrust. I guess that's pretty good.
Well, first of all, we're seeing legacy payment systems like PayPal come into the crypto space, and Utrust has already been doing it in a manner that's more authentic to the crypto community before that. Every single day, it's like I get a tweet or an email that says the next like 12,000 partners that they've added in places that you can buy crypto. And I believe the crypto payments are inevitable and a huge barrier to mainstream adoption. And I think that they're ahead of the curve in solving that. So I just really believe in the project and am willing to kind of view it as an investment.
All right, guys, that is all we have time for. I mean, we got the lines are going crazy. The waiting room for the lines is full. It keeps saying more people want to come in, but we simply don't have the time. I guess we have to get you guys back on the show again. People love this segment. It was a great pleasure hosting you guys. I certainly learned a lot. You made my losses more human. So thank you, Scott. And thank you, CryptoBurb. We're off the next segment of our show. And the next segment of our show moves from trading to Ethereum. And we're going to bring in Andrew back onto the show. Andrew, one of the things that you wanted to talk about on our show today is this Bitcoin versus Ethereum call. Now, for those who just logged on or just joined us, first of all, hit the like button, hit the subscribe button. Now, we're doing so well. We're growing the show every single day. What we're learning here is people want live, real-time trading information. We're bringing it to you. We're bringing it to you with a whole lot of partners, which we're going to announce in the next couple of weeks. But for now, hit the like button, hit the subscribe button, because that gets our content to the community and to everyone else. Andrew, you wanted to talk about the Bitcoin versus Ethereum debate. And I called up the chart, the Ethereum versus Bitcoin chart. And from a pure pricing point of view, what you can see is that if you would have bought Ethereum instead of Bitcoin at the beginning of the year, you would have made 2x return on your Bitcoin, which means that you would have made more money by holding Ethereum. This kind of ties up with what Grayscale is saying. Grayscale is saying that they've had huge demand for the Ethereum product that Grayscale has. That product also has a much bigger premium, which means that there's a lot more demand from retail. That came out in an article by Cointelegraph on the 4th of December. Andrew, what are your thoughts here?
Yeah, I think as the year goes on, that divergence between Ethereum outperforming Bitcoin, that's only going to get stronger. Right now, there's a very strong digital gold narrative going around. We're seeing a lot of research notes come out from big Wall Street firms and things like that, really pushing the case for Bitcoin, the one that, the maximalists have been pounding into the table for years, right? But if DeFi ever gets that similar kind of narrative push, then the headwinds for Ethereum could be incredible. I think that right now, the top performing assets across the space the past few months, Aave, Yearn, SushiSwap, none of these are available on Coinbase. None of these have a Grayscale investment trust to their name. And these are all part of Ethereum's DeFi ecosystem. If these retail Robinhood investors ever get a chance to get access to these really hot, really strongly performing coins, I think that, what's Ethereum to Bitcoin right now, 0.003 or something like that, it's just going to go.
Exactly. 0.0032, that was the latest reading that I got. Is the narrative for Ethereum now DeFi? So in other words, when I'm buying Ethereum, am I buying DeFi, or is DeFi just something that is being spoken about, but I'm buying a whole lot more?
I think, the latter. Right now, DeFi is the strongest headwinds for Ethereum, but there are going to be other ones coming up. We're starting to see really significant prices for NFTs. We're starting to see a lot of really exciting intellectual property come into NFTs. The NBA with NBA Top Shot. There's the new Doctor Who project. Cointelegraph ran an article about that today. There's just more and more interest in that collectibles narrative, and I think there's going to be a much larger governance narrative as well soon. But Ethereum encompasses all of that, and that's all just, again, I think Ethereum is going to significantly outperform Bitcoin over the next year.
Okay, now I'm not asking you as a trader. I'm asking you more from a fundamental point of view, because I know that the one thing you're not going to talk about is trading. It's not what you do. You guys are much more about fundamental analysis and the news. Do you think that Ethereum today, on a risk-adjusted basis, is the most exciting coin on the market? And I'm asking you this on a risk-adjusted basis. So we know Bitcoin has a lot of upside, probably also less risk than Ethereum. I guess that Ethereum has more risk than Bitcoin, but probably much more upside. On a risk-adjusted basis, is there any other coin that you'd be looking at and saying, hold on a sec, this could actually be better than Ethereum?
I mean, there's a lot of other layer 2 coins out there that are trying to compete with Ethereum. But right now, again, you have all these research notes coming out. Bitcoin has proven the value of and the narrative of Bitcoin as a distributed ledger. That's being written into stone as we speak. Ethereum still has to make its case as a distributed smart contract network. I think that, we're not seeing these really thoughtful hedge fund managers come out and say, okay, I get it now. And they're going to. And so if you solely look at it through that narrative perspective, then once Ethereum gets to prove itself to the world, yeah, I think there could be fireworks. And from that risk-adjusted basis, that makes a lot of sense to me.
Yeah, I guess I'm listening to you talk and, talking about a fund manager. Now, a fund manager who's looking to buy either Bitcoin or Ethereum says the following. He says, look, if I buy Bitcoin, I'm buying a store of wealth, hedge against inflation, digital gold, and I can buy this through the Grayscale Trust. If I buy Ethereum, I'm buying a supercomputing network that has the network effect where all the smart money VCs are putting a lot of money behind it. I'm buying DeFi, I'm buying NFTs, I'm buying SoFi, and anything else that's going to come with it. I'm buying it with one instrument, and I'm having an option on all of these. And the best thing about this option is that even if one of these verticals doesn't work, it doesn't affect the price of the main chain itself, because the chain is agnostic to the projects and the verticals that are building on it. So I guess if I was sitting as a fund manager, then I would be saying, hold on a second, maybe 50-50 into Bitcoin and Ethereum, even though Ethereum does seem a bit riskier.
To make that 50-50 allocation, you'd have to understand Ethereum. But I think once you do, it's a no-brainer. Like you say, the relative potential upside, I think, is significantly higher, and the only thing that would slow a rational actor down who breaks down what Ethereum's been up to recently is just not getting it, not seeing it, and not understanding it.
For those guys who've just joined us, first of all, we are talking about whether we should be buying Bitcoin versus Ethereum. And that is on the back of an article that was published in Cointelegraph. Cointelegraph published amazing articles. This was one that we picked up on. Ethereum only. Investors are growing according to Grayscale. That matches up with the charts. If you look at the Ethereum chart, Ethereum has outperformed Bitcoin on a factor of at least 2 to 1. If you look at the 1 year time period. For those who've just joined us, please, guys, hit the like button, hit the subscribe button. We need you to do that to get our distribution up. We're having a great conversation here with Andrew Thurman. He's the weekend editor of Cointelegraph, and we're talking about Ethereum versus Bitcoin. You love DeFi. I know you love DeFi. Our viewers and our listeners also love DeFi. We've educated them along the way. We had DeFi Dad yesterday and a few others. In the DeFi space today, what are the most promising projects? And I want you to keep it to projects where there's a token. Because our guys are traders. Our people want live, real-time information so that they can make trading decisions. What are the most exciting projects out there that you can buy using a token?
Well, I hate to disappoint them, but I think alpha in DeFi is getting trickier than you would expect. It's not as simple as just sometimes buying the token associated with the name, right? One example is Mirror Protocol. This is a new synthetic assets platform aiming to compete with synthetics. They're live right now. They've got some interesting products that let you use Ethereum to trade synthetic Apple stock, synthetic Tesla stock, synthetic Netflix stock. And if you see the use case in that, which I think you should, being able to trade these things 24/7 is a very powerful tool. You might just immediately say, "Oh, I need to go buy some Mir, MIR." Right?
We had the guys yesterday from Terra Luna, the Koreans. They were the developers of the Mirror Protocol. We had them on our show last night. It's a very, very, very interesting protocol. I mean, if you look at the design of the protocol, you look at it trading against the Terra pair, the synthetic nature of it, the mining or liquidity providing aspect of it is also very, very interesting. I think that must be a first, right?
I think so. Using this liquidity mining, there's a lot of new ways that people are experimenting with doing synthetic assets. It's going to continue to be this wildly popular use case, and for good reason. But liquidity mining, that's Mirror's sort of claim to fame, and I think it's a powerful one. It's also why traders need to be a little bit skeptical of the Mirror token. If traders want to participate by adding liquidity to one of these pools, that gives them exposure to one of these really hot tech stocks while also earning interest in the form of Mirror tokens. However, holding the Mirror token by itself, that's a constantly inflating governance token. And so you might be facing a situation where, similar to Curve, right? You really believe in Curve, but there's tremendous downside sell pressure on that token basically at all times. And so, again, I just caution traders who are really into DeFi, research the protocols, because there's lots and lots of ways to make money in DeFi, but it isn't always as simple as just aping into the token anymore. You might have to become a liquidity provider. You might have to participate in governance. Things are getting a little bit tougher to find that alpha.
You know what I found happened to me specifically in the beginning of my DeFi journey is I bought the tokens. I landed up buying sushi. I landed up buying the tokens. And I was the only asshole that wasn't mining or farming for yield. And so what happened was I was holding the bag. Others were holding the bag and making 25,000, 2,500, 1,200% APR. And then I was the one watching the price go down because I was the only one who wasn't yield farming. So question is, if our viewers are watching this and saying, I want to get into the DeFi space. I love the DeFi space, but I don't know how to farm. And we will, get you back here one day and talk about yield farming. But until then, are those guys dummies? Are those guys going to land up holding the bags because they're the only ones who are not getting yield on their assets?
Yes. I think the first step that somebody who wants to participate in these networks should do is go out and find a way to participate in a DAO. I think in DeFi, it's very useful to have friends, and it's very useful to have friends who are smarter than you are. And one of the ways to make those friends is to, take the notes at the meetings, to, organize, sending out, computers for the DAO members from the treasury, whatever it may be. Find a way to chop wood and carry water for DAO, and those guys will help you out and bring you along and train you up. And pretty soon you might actually be able to make money in DeFi, which is not sometimes as simple as a lot of people expect it to be.
Yeah. Now, one of our viewers or one of our listeners says, YFDAI can be higher than 6K. What do you think of YFDAI? And again, I'm not looking for price comment from you because I think, our discussions are not around price. I want to know about quality of project, whether they're doing big things, whether you trust the project to an extent. YFDAI, is it on your watch list?
It is not. I'm guessing it's just a Wi-Fi fork.
Yeah, so I think if it's not on your watch list, let's leave it out there. What other projects are you looking at? So Mirror Protocol was one that you're looking at. What other ones?
Cover. Last time I was on, we talked about how folks who had just been part of the pickle hack had some of their funds, a few of them, reimbursed by buying Cover tokens. I remember that discussion. I remember very clearly that you said that this is going to be very interesting to know what happens, to see what happens with Cover Protocol. Now, for our viewers or our listeners who don't remember that show, the Pickle Protocol was hacked or was breached, and they lost around $20 million. Now, some of the holders were covered by Cover Protocol's DeFi cover. Andrew, pick it up from there. That's exactly right. Cover offers an interesting model. They say that they're not insurance, and they're technically right. With insurance, you buy a policy, and if something bad happens, a governing body gives you money. What Cover does is that it mints tokens that can be redeemed for DAI if a hack of a particular protocol takes place. And, after the pickle hack, they redeemed over $300,000. It was the first real test for decentralized insurance for DeFi, I think, and they passed with flying colors. Now they've become one of these projects that have been acquired, are in collaboration with Yearn Finance, and they're just on a tear. On Friday, they had 20 million in total value locked. As of today, they just cracked the 25 million level. Cover does have a governance token, but it is another one of these instances where you need to do your research and figure out how to liquidity mine, provide liquidity for these insurance pools as the way to make money. But
and that's exactly the point. I mean, when you came onto our show, I don't remember exactly, but I think the cover token was trading at around $300 or so. This weekend, it went up to almost $1,000. And, you know, for those guys who bought it at near $1,000, it came back down to about $700. I haven't looked at it during the show, but just before the show, I saw it at about $700. That gives it a market cap of around $30 or $40 million. It doesn't sound like too much for something that's as important in the space, right?
I think that the space is still trying to figure out, because we have new terms, right? Total value locked is very different from assets under management for a traditional bank. You can figure out how you should price a banking stock sometimes by looking at assets under management. What does total value locked mean for a DeFi protocol, and how do we value that? Similarly, a protocol like Chainlink, you know, total value secured. All these protocols that have total value locked are secured by Chainlink. So how do we find valuations that make sense for these new metrics? I still think that we're trying to figure that out, but in the case of cover, I think 30 million relative to 25 million total value locked, maybe that's actually a little bit cheap.
It looks cheap. All right. Any other ones? And specifically in the insurance space, I saw there was Ensure and Nexus Mutual, both of those in the insurance space. Do you look at any of those?
I would encourage people to take a look at EtherRisk. This is another insurance protocol that's trying to actually provide real-world parametric weather insurance. They have an interesting project right now for microinsurance policies for farmers affected by global climate change in Africa. I think that you know, there's a lot of competition right now for who's going to insure DeFi, and not enough attention is being paid to who's going to bring these smart contract-based insurance policies to the real world. EtherRisk is one of the folks working on that, so take a look at them.
So EtherRisk is actually bringing smart contract-based insurance on the Ethereum blockchain, sourced by the crowd, but not for DeFi, but actually for real-world use cases like farming. I think farming is their first use case, right?
That's right. They're the ones who previously launched a parametric flight insurance product. So if your flight was late, they would give you a little bit of money and, you know, partially refund you that for the inconvenience. So they're finding these interesting data sources, weather data, flight data, and trying to sort of package, again, parametric insurance products around those. And I think that's very, very interesting. That is a, you know, potentially massive industry. And parametric insurance could make it even bigger than what it currently is.
It's a huge, huge, huge industry. And I want to just break at this point and say, we've launched a fund called Your Crypto Banter Fund. And it is exactly that. It's your fund. It's a fund where you guys make the calls based on the calls made on the show. So if you hear about YFDAI or EtherRisk or any other token on the show, at the end of the show or during the show, we'll put a poll in our Telegram group. If the poll is above 75% for a buy, we buy the token. If it's below 75%, we don't buy the token. And then the same thing for when we should sell. If the sales are above 50%, we sell the token. And so we will build a fund and we will grow this fund. And at some point, we will give this fund back to the community. And these are very exciting calls to talk about for this fund. Now, guys, we have been here speaking to Andrew Thurman. He is the weekend editor of Cointelegraph. If you have enjoyed the conversation, hit the like button, hit the subscribe button now, because that's what gets us the distribution. And speaking of distribution, we have had amazing distribution thanks to you guys, because you've hit the like button and you've hit the subscribe button. We have doubled our show every single week, but that's not the end of the show, because for the next segment of the show, I've got another guest with us. And this guest goes by the name of Income Sharks. Income Sharks, you are live on air with us here at Crypto Banter. Welcome.
Hey, thank you. Thanks for having me.
So in the discussion with Andrew tonight, we spoke about whether people should be looking at Bitcoin or Ethereum. We think that Ethereum may be a better trade or a better bet. What do you think?
Completely agree. I mean, Bitcoin's almost near all-time highs. Ethereum has a long way to go. I think has a lot more utility right now with DeFi and a lot of other coins. So I would 100% agree. And I have way bigger bag of Ethereum than Bitcoin currently.
Okay, now I take it that you guys have both been here for a while. And when I say a while, probably anything before 2016, 2017. If I were to ask you, what does Ethereum feel like relative to Bitcoin's growth cycle? In other words, to me, Ethereum feels like Bitcoin felt in January of 2017. That's how I feel in terms of how much people understand it, people's ability to grasp the concept of smart contracts. I kind of feel like Ethereum is around January, February 2017, maybe March. How do you guys feel?
You want to go first?
Yeah, I mean, that's a tough one because, Ethereum just had so much going on the past few years and so much building happening. And so grokking Bitcoin and understanding what Bitcoin is, you can do that in an hour. There's great educational resources. Getting Ethereum and really understanding everything that's happening.
Really decentralized money with miners that mine and mint tokens, and the token rate that mints halves every X amount of time, and who pay. Come on, I think you're just taking for granted how much and how many times you've told the Bitcoin story.
That might be true. I'm also a former teacher, so perhaps a little overconfident in my own abilities to impart these concepts. But I think Ethereum takes a little bit more time to understand. And so we might be stuck in that, March 2017 phase for a touch longer than we'd like. But over the long run, there's a lot to happen there, I think.
Income Sharks, before I let you go, before I let you answer this, can you imagine sitting at Christmas dinner and trying to explain to people why they should buy Ethereum? So not how Ethereum works, but why they should buy Ethereum. So the conversation would go something like this. It would be like, you guys should be buying Ethereum rather than Bitcoin. They would say why, and you'd say, well, Bitcoin is a store of value. It's a digital gold, and at this point, most people have already lost you, but they're kind of nodding their heads. And you say, Ethereum has this thing called smart contracts, and smart contracts allow for decentralized finance and NFTs and SoFi and so on and so forth. And by that time, there's not a chance in the world that anybody is going to be able to buy Ethereum.
Yeah. No, I mean, you're totally right, because it took Bitcoin even like 12 years to basically be like, hey, look, it's a store of value. It's a hedge against inflation. And that took a long time for even like normal day people to kind of get like, you know what? I see a lot of stimulus going in the US, things like that. They're like, hey, I can actually see a use case for like a hedge against inflation. But Ethereum, yeah, like you said, there's actually way more tech and there's way more utility behind it. But good luck explaining that to people. But the only people I think that get it are the ones that are like, you know what? This is over my head. But I see how far Bitcoin went. Why won't Ethereum do the same? And just simple things with tokenomics where they think that Ethereum's only $600 right now. They're like, well, that could go to 20,000. So you might be able to kind of convince retail like, hey, look what Bitcoin did. Ethereum's lagging. But other than that, I mean, Ethereum does offer a lot, but it's going to take a lot to convince people or to show people. And I remember like back in 2017 with Ethereum, like the ICO when I got in, it was just like, there was so many potential. There was a lot of potential for what it could do. People were like, it's going to get rid of real estate agents. It's going to replace lawyers. It's just going to like wipe off old technology and be such a disruptor. And then it kind of fell off. But I do think long run, there's a lot more potential for that. And I think that's what's exciting for me in Ethereum, at least. And we see with the DeFi and all that, everything in the space right now.
I mean, I must tell you, when I first bought my Ethereum, I didn't get an ICO. I got it at $2. And the reason why I bought it was because Bitcoin was at about $1,000. And I thought, hold on, what is this other thing on my Coinbase? And it was Ethereum. I think it was Coinbase. And it was Ethereum. And I was like, well, let me buy this $2 one. And that was really my entry into Ethereum. It was buying X amount of Ethereum at $2. And that was my entry. So I guess for any noobs, they may just get buying pressure on Ethereum just because of the price differential.
Yep. And I mean, look at Ripple. I mean, I think still from day one of Ripple, everyone looks at it like, hey, look, Ripple's only 10 cents. It's 20 cents. It could go to 20,000. Doesn't make sense for Ripple, but a lot of people don't know that. And I think that's why retail just loves Ripple, because they see how cheap it is. and they think a lot of people don't even know you can buy a fraction of Bitcoin. And that's what I always have to explain to a lot of my friends. They're like, well, I don't have 20,000 to buy it. It's like, no, this isn't like a stock. You can actually buy fractions of it. And that's what's so exciting. So a lot of them are like, hey, I just bought this Ripple. It's only worth a few cents. It's going to be worth $10,000. Like,
wait. You're killing my high here because I bought Ripple thinking that it's going to $589. Is that not the case?
Yeah.
No, I mean, some guy on Twitter said it's going to $589.
Yeah. No, that's became a meme, and it's pretty funny, but I would love to see Ripple over $1. People are still so excited, like, oh, it could go 10, 50. It's like, let's break $1 again. Minus 1 month, it went to $3. It's arguably not done a lot, and there's a lot of coins in supply, and still only half the supply is out there. So once all that gets released, we're talking billions and billions of coins. And I'm sorry, not thousands and millions of people can't become millionaires. It just doesn't work that way. So you kind of have to figure who gets rich on Ripple.
Andrew, I'm not gonna subject you to a discussion on Ripple. I know that it's not your favorite coin. So I'm gonna thank you for joining us. Thank you for coming on Crypto
My pleasure.
Banter. It's been amazing having you. Our audience is going crazy. They love you. They want to see you back as soon as possible. Thank you so much. And Income Sharks, I'm going to keep you here and we're going to have a much more trading focused discussion. But before we have a trading focused discussion, what I want something from our community. If you follow Income Sharks on Twitter, if you are a fan of the show, hit the like button and hit the subscribe button now. We need you guys. We need you guys to hit that button. Pound the button. Pound the like. Pound the subscribe. Pound the bell, because that will give you alerts when we're back on air. Income Sharks, welcome back. So let's talk about XRP. There's an airdrop that everybody's very excited about. Are you excited about the airdrop?
Not really, but it's enough to kind of motivate the price or kind of push the price up. So I did get back in Ripple a little bit, but I don't know. I'm not as crazy about the airdrop as other people are. So
okay, so you got back into Ripple. What level did you get back into Ripple?
Oh, XRP. I mean, it was just a swing trade. I might even already be out of it, but it was like back at 50 cents or something, just literally looking for a little hype momentum, push it up a little bit, and then just cut it and move on to another coin. So, I mean, me personally, I love getting into coins where if I miss my entry, I can hold it and get it back. But Ripple is one where if I don't get out in time and this hype kind of falls off and then it plummets back to 30 cents, then you're stuck holding the bag for another 2-3 years, which a lot of Ripple holders can attest to. And that's just not something I like to do personally.
So XRP Hodler for Life says, can XRP go to an all-time high? What do you say to that? I think if I remember correctly, the all-time high was around $3. Is that Ripple?
And that was just such like I don't want to say a fluke, but it was just parabolic, just completely insane. The news was talking about everyone just Ripple shot up and then it falls to 20 cents. So, I mean, I would say Bitcoin would have to be $30,000-$40,000 for Ripple to break $3 again. I don't know. There's so much sell pressure and there's so many coins. It's just hard for me to think that it could just casually go back up to $3 because that would make a lot of people a lot of money, and that just never seems to happen in this space.
Amazing. So what else are you looking at? I mean, it sounds like you had a swing trade on Ripple. I think what our viewers and what our listeners want is they want to know what you're getting into now. What is it that you're looking at right now? And I've got a whole lot more questions for you.
Okay, so one that, I mean, if my followers have been following, they've seen me post a lot about Easy Coin. It's a DeFi lending protocol. And that's one I got back in when it's about $1 million market cap. It's pushing up to like $4 million market cap. It was listed on Binance like from very early. It was listed for free, one of their innovation projects, one of the lower market cap on Binance. And they've partnered with Matic, Link. It's just a very big growing team, and not a lot of people are talking about it. And that's one that's got me really excited. I'm very heavy in that one. And you just start looking at tech. They keep pushing out updates, big things. And again, the market cap's 4 million. And we're talking about Ripple, which is hundreds of billions. I get more excited about a coin that's worth a fraction of that, and it's just growing every day, and it's actually has a use case. It's getting involved in DeFi, and it's if you've looked at Comp, the coin that's same exact supply, same lending protocol, and that one's well over $100 million market cap. There's no reason why Easy, to me at least, can't go up to at least compete.
That's Easy Protocol. And I'm getting some terrible feedback. I've got our producer, Adrian Bashik here. Adrian, you are looking at the social airwaves. We are going to carry on speaking to Income Sharks. But what are the social airwaves looking at? Income Sharks, you tell us what you think of what's going on in social airwaves, and then we're going to talk about your coins a little bit more.
So what do you mean social airways?
So Adrian trolls Telegram and Twitter, and he looks around and he finds the coins that have the most social hype every day. And we found that there is some correlation between the social hype and the token performance. Adrian, are you there? We don't have your sound. Let me try and unmute you. Maybe that might.
There we go. How about now?
There we go.
Technical challenges here in crypto media. Absolutely. Yeah, I mean, we're looking across socials, Twitter, Telegram groups, Discord, to see what people are talking about daily. We covered a lot of stuff yesterday. Mir has been brought up again. DPI, the DeFi Pulse Index has been covered. People are talking about that. I love checking out Lunar Social Crush's first feeds when they come out daily. So that top 10 24-hour alt rank, you see Hard Protocol, SushiSwap, Waves, VeChain, a lot of talk on this episode today, Filecoin, Nexo. A lot of people are talking about Nexo as the next Celsius that, connects Aave, Blockstack, Munib Ali's project coming out and being listed on U.S. exchanges, Compound that Income Sharks just talked about, Ampleforth. There's a lot of talk about Base Protocol recently, kind of a new other rebasing project. And then if you look at the searches, these are bigger projects, just top 10 trending searches. And again, this is Lunar Crush. You can follow them on Twitter and check out their sites always. Bitcoin, Zilliqa, Cardano, XRP, VeChain again, Waves, Easy5. Big shout out again to Income Sharks. Great project, great team. Binance Labs, innovation project. Orion Protocol, lots to talk about around Orion very recently. You can see a big cut coming. After that, Digibyte and Hard Protocol. Income Sharks, your thoughts on some of the Nexo, the Blockstack, some of these newer projects that are out, and even Hard Protocol?
Yeah, so hard one. I literally got in just because I thought the name was funny compared to Easy, which was I was already in that. And I was like, well, if Easy could pump, like why can't Hard? And that one kind of really took off. I haven't looked at the fundamentals of that one. I scalp traded that because I was like, hey, there's a lot of volume coming in. Seems like it's doing well. So I'd have to know more about that one. Sushi, obviously, a ton of hype always been around Sushi. It definitely had the big crash after a lot of the FUD happened in that. Waves, I've seen a lot more about. And VeChain's always been one. I mean, I've followed VeChain for years now. So
my concern on that, we saw 5X kind of run up over the summer and before the whole DeFi craze. I'm not sure if it topped out then, but as we said, it kind of bottomed out yet again. So there is room to run. We're seeing a lot of stuff about Oasis Protocol. This is the first time we're bringing it up on Crypto Banter. We've covered them out of Berkeley. We were at their labs in their building phase. We know the team. This is literally a Silicon Valley, Berkeley project. Their ticker symbol is ROSE. They're immediately listed on Binance. They've got an integration with USDC. All these funds are big in on them. A16Z, Polychain, Pantera, Hashed out of Korea that we talked about yesterday, Binance Labs, Kinetic Capital. Their ICO price was 3 cents. You're in at 5 cents right now. Some of your thoughts, Income Sharks? Have you looked at it at all?
Yeah, so I've seen the Rose ticker pop up. I didn't know that was a Binance listing. Like I personally really like the Binance free listings because I know they're a lot better about vetting those projects. It's not just a random DeFi project or a Uniswap coin. So now that you've told me that, I'm gonna dig deeper in Rose because I didn't really know what Rose was, but that actually sounds a lot more promising, kind of more up my alley for what I like to personally invest in.
Anyone and everyone should be digging into Oasis Protocol. This is, again, a top-notch team, real tech, immediately listed on Binance, all these integrations, all these funds integrated with Oasis. We met with the team at Berkeley. You saw the coders in action. Your thoughts on them?
Yeah, I think the one thing that Oasis did was they took a long time to come to market. They took a long time to build their tech. They did it properly. They weren't chasing token returns. They were more making sure that they did it right. as per the law and as per technologically, and they didn't worry too much about tokens. And the results are coming out. I mean, they listed at the ICO price was 2 cents, and they listed at 6 cents. They went back down to 4, and now they're starting to make their way up, which means that we can only believe that people are all the dumpers have gone and people are now buying it. Another one that's interesting, Adrian, you mentioned Base Protocol. Now, I don't know what to make of this Base Protocol. Base Protocol went up a hell of a lot.
Yeah, too much. And so, Rand, I'm going to stop you there because we're not trying to cover things that have run up and maybe we'll go back down. Let's look at some other stuff, and let's look at Wazax. Got a ton of commenters in our YouTube asking about Wazax. This is eForce. This is Steve Wozniak's $1 billion venture to democratize and finance energy efficiency investments worldwide. This is a big deal. Okay, this is not a fly-by-night, just energy token, which you saw hype around in 2017. Some coders doing an energy thing. This is Steve Wozniak, the co-founder of Apple, and you just see a lot of comments. People are curious about it. It only listed on HBTC, by the way, HBTC, and we've got growth from there. People got in at 125, 126. It's hit 154 today.
Income Sharks, are you watching Wazax?
I looked it up briefly. I mean, from what I saw, they said, because I'm US based, and they said I couldn't even buy it. I'm sure that'll change, but I thought it was kind of random. I honestly thought it was a joke because it just looked like someone was trying to pump a coin, trying to say that the Apple CEO started this project. And you kind of hear that a lot in this space. We're like, oh, this is backed by Google, whatever. But I mean, it's interesting to see that he's getting into crypto space. And it's kind of a, I don't know,
he's long been dabbling. He's a BTC holder and user. We talked to him, Rand, at the LA Blockchain Summit, LA Blockchain Summit, one of the best. He never wanted to make too public commentary about crypto. And here he is, and he partnered with some real deal crypto operators. A lot of people are talking about it. And all we're doing is bringing you the information of what people are talking about, and it's there. Moving on, there's also Injective Protocol and launching Solstice V2. A lot of kind of stealth operations there that people are mentioning it. Anyone seen comments on that?
Injective was a call that was made in our Telegram group for the last 3 days. We called it from about $1.50. It's now trading at $2.20. That was a call in our Telegram group. So guys, you have got no excuse. Our Telegram group is at the bottom of the YouTube channel. Click the link, join the Telegram group, join the calls. This Injective Protocol is one that we've also got in our fund, which we'll start posting pretty soon.
Yep. Next, there's, I don't know if you guys follow Bitcoin Brown.
Bitcoin Brown is coming on our show tomorrow. So Bitcoin Brown has a segment on our show tomorrow. He's a great guy. He's coming on to talk about exactly this tweet.
So yeah, this tweet, I mean, says it all. He's big on the DOT protocol, on the whole ecosystem in Polkadot. So you'll see him DIA, NOIA, CVP, PCX, CRU, polls, and then just anything DOT ecosystem related.
And he loves RSR and he loves Coty. I mean, Bitcoin Brown loves RSR, loves Coty. Income Sharks.
And NOIA and DIA. Any thoughts on that? Because a lot of people are asking about NOIA. A lot of people are checking out NOIA. Same thing with DIA and Orion.
I mean, I've heard of DIA. I haven't heard of NOIA yet. I'd have to look more into those personally.
Yeah.
There's a lot of coins in this space now.
Okay, so Income Sharks, I want to hear from you before Adrian carries on. I want to hear from you one of the coins that you're trading at the moment.
So obviously the easy coin, that's one I've been pretty heavy in, swing trading a lot, accumulating a lot. No reason that doesn't go to $30, $40. I mean, you look at what Comp's done. I know Comp's got the earlier mover advantage, but the tech and at least what I've seen behind it, I don't see why I can't do that. And the team's tokens are locked for 6 to 8 more months, and that's kind of rare in this space. And as far as I know, I mean, there's only a couple thousand coins that enter the market every day through staking and everything. So that's just one I'm big in. Minus obviously the majors, Bitcoin and Ethereum. Still holding Ethereum. I think I got back in at like 380, and I'm just waiting. No reason to sell that one, so I'll just keep holding that. And And then a lot of other coins, I'm just more jumping in and out. I'm a lot more of a swing trader. I see a chart that looks good. I don't care what it is. I jump in, take profit.
So which chart looks good right now? We've got the chats going crazy. People are asking which chart are going good. All right, give us a chart.
How about Tomo?
Tomo, have you got the chart? Can you share the chart with us?
Yeah, how do I share the screen?
At the bottom of the screen, there's a thing that's called a
screen
share.
That says share screen. Okay.
Guys, we are running out of time, but I just want to remind our viewers, it's been an excellent show. We've had so much fun with you guys here today. Please hit the like button, hit the subscribe button. That's how we get the views. That's how we get the distribution. In the meantime, Income Sharks is bringing up his screen, and then Adrian and I are going to continue on the social airwaves. So we're looking at the Tomo BTC chart.
Yes. So this is the Tomo. If you guys can see my screen, we're looking at pretty strong horizontal support. If you can see that, it's crossing all the way there. And one of the indicators I use that I'm really passionate about is super trend. And that's one that's flipping a long signal, which is usually a very bullish indicator. And so kind of getting that confluence of seeing that horizontal support, super trend turning bullish. And then if you look at the actual, what they're releasing the next couple months, they have about 4 or 5 really big events as far as their code, new releases and things like that. So this is not only a technical analysis play, but this one fundamentally where I think Tomo is just really going to take off. And once we kind of see Bitcoin dominance, I think it's going to drop a bit. I think the BTC pairing is going to really push up. And I'm playing the BTC pairing because worst case, I accumulate more Bitcoin. This would be the Tether pairing, and same kind of thing. It is starting to push up. It's forming a little bit of a bottom here. The super trend's still a little bearish there, but once I think it does push up, so that's just one right now I'm really watching, and I'm pretty heavy in it right now.
All right, so Tomo it is. Income Sharks, we're going to let you go. Thank you so much for coming on the show. We definitely need to get you back. I feel like it was like a half a date. It's like you promised me dinner, and we only had the starters and the drink. So we'll get back. We'll find some time to our producers. To our producers, if you are listening, let's get Income Sharks back on to show us what else is charting. Adrian, I want to carry on with the social airwaves because there were a lot of gems in that social airwave.
Yeah, we've got moving on. As we took a look at Noya and Dia, Noya is out of Berlin. We've talked to the team there and the project they're working on. Spectre Group, also follow them on Twitter. You've got their kind of new rankings that they come out with quarterly. They're looking at KSM, TRB, PCX, XRT in the Polkadot system, FRM, Pulse, Strong, CRU, MPH, EPAN, and Rose. And Rose, which we talked about, and that Oasis Labs, again, we know the team, and we think that there's a lot of upside there. We talked about yesterday a BPI, which is the DPI, which is the DeFi Pulse Index. You can participate in their liquidity mining program in Index. A lot of talk about the Mir liquidity mining. They've got a very similar thing with the Index protocol. A new project coming out that BitMax announced is Terra Virtua. It's a super interesting. It's an auction based bidding system that is coming out on BitMax. If you're trading that. And then also yesterday we talked about Mir, and today we talked about Mir. A reminder that if you had 100 Uniswap in your wallet as of just November 23rd, right around Thanksgiving, you can claim your Mir, and you go to eth.mir.finance/airdrop, eth.mir.finance/airdrop to claim that. There's no reason not to. Trust me.
Alrighty, Adrian, that's amazing. And guys, we are totally out of time. We've actually gone overtime. It's been a jam-packed show. Loved hosting it, loved being here to facilitate. But ultimately, this is your show. So for those of you who did join us, thank you so much. And for those of you that hit the like button and the subscribe button, thank you even more. You guys make the show. You bring the banter. That's what Crypto Banter is all about. And just a reminder from our legal team that
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station. Listeners are encouraged to do their own research.
I'll see you guys again tomorrow, same time, same place.